welcome to EMS and the Economist. I'm with Shawn DuBravac, Chief Economist of the IPC. Shawn, pleasure to chat to you. Nice to see you a couple of weeks ago at Apex.
Yeah, great to see you at Apex and great to see you again.
I guess, like me, you spoke to a lot of people there. One of the things obviously elephant in the room that we should start with today is probably tariffs. Of the people I spoke to there didn't seem to be specific tariff concerns in terms of what the numbers will be. There just seemed to be a concern that we're in this stage of turmoil where their customers can't make decisions, capital equipment investors can't make decisions, and there's that whole slowing down. Was that a sense of what you got at Apex when you talked to people?
Yeah, I think that was definitely the general sentiment was that any tariffs were just going to pass forward, any price increases, and at the time we were
Mm.
looking at the potential for copper price tariffs, the copper tariffs. We were looking at
Yeah,
things like which still could come, things like aluminum and steel, and just the general sense that any price impacts from tariffs would just be passed forward. That there was this feeling of malaise starting to sit
yeah,
over executives, and just what is not unique to our industry but unique to, I think, the current environment is just the dour sentiment you see among
yeah,
executives
yeah,
trying to figure out the environment. I do think things have changed a little bit this week with the
yeah.
the
With
the
Liberation Day?
yeah, with Liberation Day and all of the tariffs. One, certain uncertainty is much higher now because there's still a lot of unknowns when it comes to translating what was released by the White House and what actually needs to be implemented within supply
Mm.
chains, what's included, what's not
Yeah,
included, what tariff rates will be. So I think a lot of company executives are still trying to figure out exactly what the implications are because it's not totally clear to them. And
mm.
then clearly, I think just sentiment took another step down
Yeah.
as confidence continues to erode.
Yeah. And when you look at the list of tariffs, some of the standouts that surprised me were 46% on Vietnam. Vietnam was seen as a good option for companies moving out of China. And currently they have a higher tariff than China at 34%. And the claim tariff charge on the US is 90%. When you look at those, they talk a lot about balancing the trade deficit. When you look at those claimed tariff charges, do they make sense? Are they what tariffs are being charged on US goods in those countries? I'm surprised that, Coca-Cola in Vietnam is attracting a 90% tariff. It seems to be selling pretty well everywhere around the world.
I think there's still a lot of uncertainty about how the USTR, which is the agency that helped derive those numbers, how they came up
Mm.
with the numbers. There's a lot uh, of second guessing how those numbers were derived. Um, and there's still a lot of uncertainty about what might happen over the next week. Some of those, tariffs don't go into effect for a few days, and so there's still this little window that
Yeah,
could change. And yet, as an
yeah,
organization, you really have to move forward with the presumption that this
assumption.
is the new reality. And so I noticed. Likewise, the impact of the high tariffs on Vietnam goods that could have that ripple effect on electronics. When you look at a couple of categories, you see things like laptops, where in 2024, about 27% of the laptops coming into the US were coming from Vietnam. And that's
Mm.
obviously been a big shift in the last 4 or 5 years as companies looked to diversify away from China. China is still
Yeah.
the bulk of laptops coming in the US at about 66%, but you have seen that decline pretty significantly, while you've seen other countries like Vietnam increase. Now with these very high tariffs on things like laptops, I think you'll have companies that are really going to have to reconsider, where they're producing and what they're importing into
Yeah.
the U.S. because it will become cost prohibitive to sell these unless you see the whole thing, the whole tariff amount passed forward and consumers willing to pay for it. But I don't see a U.S. consumer that's well positioned right now to afford
No.
higher costs, especially
Hmm.
on something like a laptop. If the price were to go up, by my estimate, just under 48% on average
Wow.
because of these tariffs. It's hard to imagine that consumers are ready to absorb that price, and at the same time, I don't
No.
think that companies can absorb that full amount given how tight margins are on some of these product categories. So I think
Yeah.
we will likely see prices go up, and as a result, we'll likely see demand
Consumption
come
down.
down
Yeah.
for a number of these products.
Yeah, and also, much as the situation with capital equipment sales being impacted as people don't know where to grow, if you're looking at upgrading your laptop, the chances are you're going to wait and see a substantial amount of the time because you're not going to want to pay a 40, certainly a 48% hike. And then the other factor is you're looking at the bill of materials for a product, even a product that's finished and assembled in the US. Much of that supply chain is coming from overseas, and Taiwan with 32% tariff on a lot of the larger semiconductors that are in there, the more important semiconductors. China with 34% with a lot of the lower cost parts on the bill of material. That's going to have an impact even on goods that are made in the US.
Yeah, definitely, and you definitely we'll see that even goods in the U.S. will rise, and I think they rise really for twofold. First, as you noted, because the component prices have gone up, but also we know that tariffs generally allow domestic producers to raise their prices to a point where they're they're able to take advantage of those higher import prices in raising their own
Mm,
prices, and it makes them slightly more competitive. So it isn't just that tariffs exclude imports and make it easier for domestic companies to compete, but it also is an environment where domestic companies tend to raise their prices. You've already seen that in things like steel, where domestic
mm,
steel producers have raised their steel prices to a point where that makes it more profitable for them. And my sense is that you would probably see the same thing in a number of these categories, even if they were fully manufactured in the U.S.
yeah,
The domestic producers will be able to raise prices, and in some instances, as you noted, they'll have to raise prices because the component
yeah,
prices are up.
yeah. And what about the nearest neighbor? Mexico were very present as they always are at Apex. They were probably the people that were most concerned about tariffs. They have an industry that's um, dependent on what has been a very good trade partnership. What do you think the impact of this week has on those? Same position they thought they were in, or a worse position?
Well, I think again, there's still a lot of uncertainties, but Mexico and Canada look like the big winners in
Okay.
yesterday's Liberation Day announcements, the announcements coming out of the White House, because
Hmm.
they were essentially left off the list.
They
So
were off the list,
um,
yeah.
it looks like the if you qualify for USMCA, then you are still able to import products with zero additional tariffs. Now, Mexico and Canada both have, the potential for tariffs in place for products that aren't USMCA
Yeah.
certified and qualified, but um, I think a lot of companies are working to get any products that
Hmm.
weren't certified to make sure that they are certified USMCA so they can qualify. And so, presuming that stays as is, I think Mexico and Canada are the big winners. And then, of course, for our industry, for manufacturing for electronics, that really points to Mexico being a big
Yeah.
winner in this. Um, the other kind of nuance here is that the tariffs are only applied to non-U.S. Um, content of the
Yeah.
product. So if you're shipping a product into the US and 20% of it actually originates in the US, then you can
Yeah.
exclude 20% of the value of that product. And so I think that's also going to be a challenge when it comes to implementing these,
Hmm.
is knowing what content, how much content, and what percentage of content is attributable to U.S. content and therefore
Yeah.
can be excluded from the tariff. So there's still a lot of pieces that
Yeah.
will have to be sorted out in the coming days
Yeah.
and weeks.
Yeah, I mean, it's a big list of tariffs and it's a big list of countries, and all of those products have a big list of components in. So it's a hugely complex puzzle, but maybe that protects a little bit some of those motor vehicles, for example, that move backwards and forwards over the Canadian and the Mexican border during the manufacturing process. What did the markets think this week?
Yeah, I mean the markets reacted quite strongly on the announcement. Obviously, we've seen that aftermath, and that will continue to roll through the rest of the global markets. And you have seen companies already start to make announcements. You saw
Mm.
some auto manufacturers announced that they were going to pause production in some of their facilities in Mexico and elsewhere as a result of the tariffs. So you are
Mm.
starting to see companies make decisions. You've seen some companies announce layoffs as a result of this. And so I think there's, we're still in the very early chapters
Yeah.
of this, but you are seeing companies start to react, and so the markets are absorbing all of that information as about as quickly as they can on the on the implications and the impact that all of this will have on
Yeah.
manufacturers.
Yeah, yeah, and like you say, it is complicated, so it'll take them some time to figure that out. What about the impact on the U.S. economy? We talked a bit about the R word, the recession word, recently, and feelings were that could be some of the temporary pain. And the word from the White House was it was short-term pain for long-term gain. How are you seeing that right now?
Definitely the probability of a recession this year in 2025 continues to rise.
Mm.
What's unique, obviously, is that it's all being driven by policy decisions that
Mm.
can be reversed. And so I think there's still the opportunity to avoid a recession, but it would
Yeah.
probably require the reversal of some policies. Of note certainly are these policies around tariffs. And so if we saw those policies reversed, then I do think you probably could avoid a recession in the U.S. because the U.S. was on very good footing uh,
Mm.
prior to the tariffs being put in place. There were
Yeah.
clearly cracks starting to show, and there were some concerns already starting to mount. But I think that a recession wasn't a foregone conclusion. And I think, after the announcements of this week, you will start to see the probability of a recession rise pretty significantly. When you
Yeah.
look at the consumer, they were already starting to cut back. Sentiment was waning for the consumers as well. They were already starting to cut back on purchases, and we could get kind of a weird result. I think in the current month where people might be rushing out to buy that car that they wanted to buy. Well, it's still on the lot, and
Yeah.
before it's been impacted by tariffs, and then after that's happened, and if they do see a big step up in prices, then I think you'll probably see them really
Really.
take a step back. So I think
Yeah.
you could have some noise in the data here in
Yeah.
the kind of early weeks in that aftermath, but I do think that you will see consumers really take a step back. And they were already moving in that direction, partly driven by
Yeah.
uncertainty, partly driven by just the ability to spend. You've seen,
Yeah.
the savings rate decline quite significantly, and the way we measure that is by looking at what people are not spending. So they're essentially spending everything that they had available to them for the most part, and so that can only go so far
Mm.
before that's been exhausted.
Yeah. So it could be a bit of a peak and then a hiatus there. When you look at the different regions, and the European Union kind of comes to mind, are there particular regions that you think there's a major change in the US relationship with, and the reciprocal tariffs are going to be an issue, and this is going to kind of roll and roll. I felt when I spoke to European EMS leadership at Apex, and there was a good few there, that there was a sense that the European Union was kind of perhaps waking up and investing in places that it should have done in the past. So there was some positivity about that, but there was a real sense that there was a kind of a renegotiation of the US-European relationship.
I think there is a renegotiating that's taking place, and as you noted, I think there is some noteworthy investment that's starting to materialize in Europe. You see it, I think, at the very front. You see it around defense, and
Mm,
greater investment in defense, and trying to build out also greater capacity to invest in defense in
mm,
Europe. I don't think that's the only area. I think Europe likewise is also looking at what type of trade relationship should they be investing in? What other countries might they be trying to develop relationships with? If the relationship with the U.S. is soured and they're going to see less business with the U.S., where could they offset some of that decline? And so I think they're looking closely at what that might look like around the globe, and I think you'll see them rewiring their supply chains
mm.
as well. So I think there will clearly be an initial hit to, you think about the automotive sector that might be exporting to the US, whether it's Sweden or Germany. I think you'll see those markets get hurt by some of the tariffs that have been put in
Yeah.
place. Some food products, maybe some other things that are imported at high rates. But I do think they'll look for other markets that they can serve, and they'll try to figure out how to weather the storm.
Yeah, and focus on those. And you're right about the changes in spending. Obviously, the recent package announced by the German government, I think just before Apex, was 900 billion, and half of that was in defense, but half of it was infrastructure. So
Mhm.
there's a lot of spend there in other stuff as well. Just getting back to the figures that come out of IPC book to bills over the last month, there seems to have been a kind of a slight improvement there. So those are kind of ticking up slowly.
Yeah, the book to bills look quite healthy, both for PCB and EMS, especially for PCB. I mean, you're
Mhm.
looking at relatively historic levels
Yeah,
for book to bill. I think it will take a few months to determine if was orders being kind of pulled forward and trying to navigate this environment. So, but early signals of quite strong demand in both of those markets for the North American market. And then, and again, I think you see companies trying to figure out which direction they want to move in. Certainly, we saw that in the sentiment numbers, which looked pretty strong, but we asked a special question this month about how they were responding to tariffs, and you see a variety of different approaches that they're taking. About 31% of manufacturers said that we're investing in automation and trying to counter the tariffs through that. A
mm.
little under 30% were switching to non-tariffed suppliers. Now that kind of went out the window
Yes, there
yesterday.
are none.
Um, so
Yeah,
I don't know if that will continue to be a strategy. And then you see about 60% saying they were going to renegotiate supplier contracts. So they're trying to move the costs of
yeah,
tariffs upstream if they can. And and then on the workforce side, you saw 18% announcing hiring freezes. Another 36% of companies were considering it. So it will have an impact on the labor market, and I think every
yeah.
industry will take a similar approach. And I think that's where you start to see this a potential slowdown in wage growth. You start to see a potential slowdown in jobs, and so that will also feed back into demand for the economy broadly.
Yeah, there's definitely a ripple effect as it goes through the various different areas and the various different economies. There's a big impact there. One of the important things when you are an executive and there is all this stuff going on is to be able to get timely information. One of the things I noted when I spoke to Chris Mitchell at Apex was that IPC seems to be doubling down on the industry insights and the data you produce and the research you do, some new hires in that area. That's hugely valuable to the whole industry, to you when you're looking at supporting comment with insight and everybody in terms of data. That's something you must be quite pleased about.
Yeah, I'm super excited for all the things that IPC has done as far as as far as so far building out the industry intelligence,
Mm,
staffing, and then also just everything that we're going to bring to market. And I'm really excited about some studies that we have coming up that we'll be releasing in a couple of months. I think the other big shift that I really see from IPC is it's always been a very global association,
mm,
but as we see some of the bifurcation and the decoupling happen, the issues that you need to address in different parts of the world start to look very different. And so I see IPC taking also, I think, an important move in that direction, being able to, handle government affairs in Europe differently than they might in the U.S. We've added somebody for research in Europe, and we also work very closely with Dieter Weiss, as you know, and so being able to have unique statistics and a read on the market for different parts of the world, being able to address issues in these different parts of the world as they need to be addressed uniquely, I think is a very good move. So in many ways, it is. I see IPC just doubling down and continuing to move into a better position to handle the global issues that
yeah.
confront the industry.
Yeah, and many of the larger member companies are global
Mhm.
organizations, whether they're global organizations that provide EMS services or they're global organizations that supply services and capital equipment to those companies. So I think it's I think it's essential. I think you're right. You've seen that process occur over a extended period of a few years, but just recently, and particularly in the last 12 months, it's felt very much like an international organization. And as you have, geopolitical tensions of whatever type, the ability to support members uniquely in each location is important. I was delighted to have had the opportunity to chat to Rich, who takes care of the political side in Washington, to talk to Alison, who takes care of Brussels, and to talk to Chris about the kind of overarching picture. And it was really nice to be able to see that stuff is really being delivered and met locally and dealt with locally, and those issues make it feel very much like a global organization. So I think supporting that with global insight is absolutely key. And as you say, we're in a fast moving world, so timely data becomes even more important. What are you expecting in the next few weeks between now and when we next speak? I guess the hope is there's a lot of figuring out how these tariffs actually work, what's exempt and what isn't, and then it's just watching and seeing what the response is.
Yeah, I think that there is obviously a lot of sorting out that will have to take place over the next 4 or 5 days in particular, but really over the next couple of weeks.
Mm,
And then also just getting more and more clarity. I know IPC has been working around the clock over the last couple of days to get clarity from the White House and from USTR and from others that we work closely with to understand how these tariffs should be implemented at the corporate
mm,
levels to help IPC members understand that. Today we hosted an IPC member only webinar that dived into the tariffs and the implications of the tariffs. So I
mm,
expect more of that from IPC as well. That you'll see a lot more um, resources and insights coming. I think corporations are going to be trying to figure out, A, how do we make sense of what's been announced, and then B, what changes do we start to implement? Do we implement those changes immediately, or do we take a more wait and see approach? I think there's still a lot of very mixed commentary coming out of the current administration. And so I think it can be difficult to determine what your next move is.
yeah,
There's still I think, a little feel in Washington, D.C. that this is just the start of a negotiation. And
yeah,
so the tariff rates as we see them today may not be the tariff rates that we end up with. But
Yeah.
it's hard to make investments on that. It's hard to make decisions on that, and I think that's the challenge that companies will face. So I think in the immediate term, they're trying to figure out what do we do next, and then obviously there's a much longer term perspective that they'll have to take as well.
Yeah, it's figuring it all out. It's a complex landscape. It felt very much when we were talking to people about it at Apex, it was all about tariffs. But I think, as you just pointed out, you got to remember that tariffs aren't all about tariffs. There's more to it. There's a lot to do with trade, and there's a lot to do with other negotiations that are happening in the background. I was amused when I wrote to you and said this show should almost be weekly, and you wrote back with just a one-word response, which was daily. I think it's important that at least when things happen and change rapidly, we can just jump on a call and provide this information to the readers and the viewers. So thanks so much for taking part again, and look forward to talking again either in a month if not too much has happened, or much sooner if something happens.
Yeah, well, with the rate of change that we're getting right now, I'm sure we will be talking very soon again on what's transpired in Washington, and as a result, what that means for the rest of the world.
Thanks so much, Sean. Chat again soon.